This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
My guests today are Fran Strajnar, the CEO at Techemy Capital, an investment management company in the digital asset space, and Fernando Martinelli, who is the CEO of Balancer, an automated asset management platform for programmable liquidity. So Fran and Fernando are both here because Techemy Capital has just announced the launch of decentralized exchange-traded portfolios, or ETPs, which of course are on Balancer, and Techemy Capital have kicked this off with a DeFi ETP. So today we're going to talk about why these ETPs are a potential game changer, what this means for DeFi, and of course how to invest, and then we'll also cover off what Balancer is and how that works. Now, just to save time and get to the good stuff, I want to point out that both Fran and Fernando are returning guests to the podcast. They've been on the show before, so we'll just get straight into the good stuff and kind of skip their background stories. But if you are a potential investor, or you want to do your due diligence, or you just want to hear more from Fran and Fernando, I'm going to put links to the previous podcasts that they've been on in the show notes, just so you know that is there as a resource. All right, let's get on with the show. Welcome, Fran, and welcome, Fernando.
Hey, Andy, thanks for having us. It's great to be back.
Thanks for having us.
Let's start with you, Fran. Probably good just to understand a little bit about the DeFi ETP that Techemy Capital is launching on Balancer. What's some background here? What is an ETP? What do you mean by that?
This is something that we've been dreaming of ever since the days of Omni, the first DEX on Bitcoin, which sort of gave the rise to the idea of, one day we'll be able to have decentralized ETFs. As more and more assets become available on chain, we'll be able to bundle them together according to a tight methodology and essentially be able to get exposure to a particular market or a subset of a market with a single instrument that's self-custodial. The concept is similar to, in fact, it's kind of a play on words from the legacy market, where ETP generally stands for exchange traded product, right? So that includes ETFs and ETNs, or exchange traded notes. Here we have, thanks to the brilliant innovation and infrastructure of Balancer, an exchange-traded portfolio. What we've built is essentially the top 8 DeFi assets bundled together according to a well-constructed methodology that's fully transparent and available online, that essentially tracks the DeFi index. So BNC, or Brave New Coin, has built a BNC blue chip DeFi index, the top 8 DeFi assets, and that high frequency index is the price of that basket of 8 assets, and that index can then go on to power futures contracts, such as perpetual swaps or quarterlies, We currently have perpetuals available for trade on btse.com and shortly this week launching on decentralized exchange leverage.io. So we take that exact same methodology, say 5% Aave, 8% this, 2% that, etc. And then we create feature parity or exposure parity. So instead of a perpetual swap, it's a tokenized basket of those 8 assets with the same weightings as the DeFi index. And it's just available through one token. So when you put $1 in, Balancer Smart Pools essentially order routes and buys the correct percentages of all 8 assets and then mints a token. So here's $1. Thanks for your $1. Here's a token representing that $1. And then you can redeem that for the product anytime as well. So the beautiful thing is it's wholly collateralized. It's not like some of the other tokenized portfolios that exist out there that are synthetic and have a wide variety of issues, including being suspiciously close to managed investment schemes as pooled assets. This is essentially rebalanced on a regular basis, full methodology available, and it's got the beautiful properties that everybody wants, which is self-custodial, 100% liquid, and instantly redeemable. Right, so you can custody it yourself, you can get your cash back anytime, essentially, and name one hedge fund in the world where you can get instant redemption. So we're really excited about those 3 properties of self-custodial, highly liquid, and instantly redeemable.
Very nice. And look, just looking at you talked about the brave new coin, a blue chip DeFi index, and yeah, as you say, that's a portfolio of 8 of the key DeFi assets, I guess. So you got UN Finance, Compound, Aave, MakerDAO, Synthetics, Uniswap, SushiSwap, and UMA, I believe. Just we'll talk more about DeFi in a minute because obviously there's a lot of people in crypto do want exposure to DeFi, and it's amazing to see these, I guess you'd call them slightly exotic products that are coming online that make it easy for people to get exposure. Why is Balancer, I guess, the platform or the partner that you've selected here, Fran?
Oh, well, it's pretty simple. I mean, for this particular financial instrument, Balancer ticks all the boxes in terms of the infrastructure required to make it happen. We really like the concept of Balancer Smart Pools. We're excited about Balancer version 2 that's coming out shortly. We'll be launching the DeFi ETP and the Maker Vault ETP on V1 now, and then switching them over to V2 when available. We expect to have up to 5 ETPs available in the first 3 months of launching these products. And, they're highly attractive products because it allows investors to stop worrying about, which one's going to be the winner and just get exposure to the entire sector and allow for, riding the whole wave or subwave of a particular investment thesis. In this case, for the DeFi ETP, it's just a simple turnkey solution, which Balancer allows to power to get exposure to DeFi. Fantastic.
Fernando, let's bring you in. So when you were creating Balancer, was an ETP, a product like this, something you envisaged? And, how far do you see this going? Will we eventually see all sorts of real world assets tokenized and able to be traded in Balancer pools in the same way?
Absolutely. I think this was the use case that I envisaged back in early 2018. Back then, we were having all those discussions about automated market makers and the X times Y equals K equation. And Uniswap wasn't even out there at all. And I saw this X times Y equals K equation less from the exchange perspective and more from the liquidity provider perspective. And that Uniswap focused more on the exchange, and you have no flexibility at all. You have to provide liquidity with a 50-50, 0.3% fee pool. And Balancer extends that and lets you choose whatever combination of different amounts of tokens with different weights. You can even choose the fee that your pool is going to charge for traders. And it keeps the balance, like the proportion of value in the pool, constant or very close to constant by having a very smart set of equations that offers the arbors or the traders to buy the tokens that the pool need to sell to get back to the percentage that the pool is set to follow, and vice versa. So if the pool needs to sell, yeah, so if it needs to sell, someone will buy because the price is appealing for users to buy. So definitely that was one of the main use cases that we foresaw for balancer pools since the beginning. And it's so nice for us to see now great teams and like whole TradFi like funds like Techemy Capital looking at us and seeing like value, and like Fran said, seeing us ticking all the boxes. I think it's just the beginning, and I'm really positive that those 5 funds that Fran said will be coming out in the next 3 months will be a massive success. I believe that using our V2 that's coming out shortly, like Fran said as well, will bring massive gains in terms of cost efficiency for gas costs, because we're seeing like gas prices soaring on Ethereum today. This is something we're going to address and be like on par, if not better than Uniswap in terms of gas costs. So, and there's so many other like novelties around the V2 launch that anyone can look up on our Medium and find more about. So yeah, I'm very, very excited to see finally some very large institutions and funds like Techemy Capital using Balancer to provide the use case that we foresaw from day one. And yeah, seeing this happen is amazing.
Yes, indeed. And yeah, so as you both mentioned, Balancer version 2 is on the way, and I'll certainly put a link to some of the documentation that you guys are publishing on that, so people can really dig into the details of what Balancer version 2 looks like and the efficiency gains and feature sets that are involved. Just while we're talking on Balancer, Fernando, I think it would be useful just like from I guess like from an LP perspective, how would you describe the difference between holding, say, a Balancer pool token versus, say, you know, something like Uniswap or SushiSwap, one of their pool tokens, just to give people context here?
Yeah, that's a great question, Andy. The difference is simple. When you hold an LP token from either SushiSwap, which is a clone from Uniswap, or yeah, fork from Uniswap, and Uniswap and Balancer, the difference is that for the first two, you're actually holding it's like an index fund of 2 tokens weighted 50-50. So whenever you add liquidity to a Uniswap or SushiSwap pool, what you have is half of your money is placed in one of the tokens, the other half in the other one. And if one of the tokens goes down in price relative to the other, so let's say token A and B, if A goes down relative to B, the pool will absorb more A tokens, so that if you multiply the new lower price by a higher balance of tokens A, you're still going to have 50% of the value of your pool that's held in token A and 50% of the value of the pool, be it in dollar terms or ETH terms, whatever base currency amount you want to take, it will always be 50-50. In Balancer pool tokens, or LBPs as we call them, BPTs, Balancer pool tokens, is basically like a passport, like Fran said, like a token that represents ownership in the pool that entitles you to a fraction of each of the tokens in a pool based on their weights. So if you have a pool with 12.5% of H tokens each, you have exposure to 12.5% of your value to each of those H tokens. And like Fran said, like you don't need to have equal weights, and that's where all the market intelligence of Techemy Capital comes in with the choice of the weights for their ETPs.
Yes, that is exactly right. And so, Fran, you did mention this briefly, but I think you said that the DeFi ETP, the exchange traded portfolio, and the future ETPs that you guys are working on will also be available across other platforms. I think you mentioned Bitsy and Leverage. Do you want to just kind of cover off a bit more about that and what that means?
Yeah, sure. So for the listeners out there, the ETP does not require a high frequency index. You need that to power a live trading of a futures product like quarterlies and, perpetual swaps. For those unaware, Techemy Group owns Techemy Capital, Brave New Coin, the benchmark administration business, Blockchain Labs, the smart contract architecture and auditing business, and a few other assets. So we've come together to try and bring the quality in product design that you would expect from legacy capital markets operators building financial instruments. If we're going to aim for achieving high assets under management in these products, to go up against companies, eventually like BlackRock and iShares and other ETF manufacturers, we want everything to be to international standards. So Brave New Coin creates IOSCO compliance indices, which can be European Benchmark Administration bylaw compliant as well, so that we can power those perpetual swaps and futures and options, so on and so forth. So the BNC DeFi Blue Chip Index methodology is up to those standards, and that index powers perpetual swaps, futures, so on and so forth. So what we've done is we've taken that methodology, right? It's rebalanced every 3 months, probably going to move to rebalancing more often as the space moves so quickly. And we've looked at that methodology and said, well, how do we create exposure parity? Instead of a synthetic product like a futures contract, how do we create a wholly collateralized single token version of that product? And that's where Balancer Smart Pools comes in. So we take that methodology and we create a ETP methodology, which has that exposure parity. So the TLDR is very soon we'll have exchanges that host both the tokenized Balancer TCAP ETP and the BNC index perpetual swap. And that's going to create some really interesting market dynamics. So think of it this way. You could buy the spot and short the perp. And that way you have, super easy hedge capabilities on one exchange. Now, things get even more interesting because, if, say, the BNC DeFi ETP is trading at a premium against USDC on a spot exchange, then anybody could come along and essentially add more collateral to the ETP, thereby minting more tokens, then depositing them to the exchange, and then just creaming the delta, between where the price should be and the premium that it has on the market. So that's one interesting market dynamic.
Well, let's just I understand what you're saying there, Fran, but I'd love you to just try and recap it again really simply. And because I've heard you use the quip, you've said something like short the perp and long the ETP. That's what you mean, right?
Yeah, it's like a triangular arbitrage. Balancer allows for the tokenization of baskets of assets in a simple and clean way, in a wholly collateralized way, which is the important feature set. And we want to then take that token and list it on exchanges and integrate it as collateral into different vaults in DeFi space and make it available through different wallets. So the great thing about DeFi is that value is essentially woven into the very fabric of the internet. So our products at the top of the funnel, if you will, you go to Techemy.capital and in KYC and you can buy it there. Not a problem. But at the same time, as this gets integrated into more and more assets and products out there, then it should be, one-click purchase and made available through products like Trust Wallet eventually and other wallets. It'll just naturally pop up, sort of like mycelium. The mushrooms pop up at different places, but it's all connected underground as one pool of liquidity, essentially. And that's the super exciting part. You just sort of obfuscate and go away with whatever the conventional front ends or top of the funnel is. And you end up having these products available in ways that even we can't imagine today. In 6 months' time, we don't know where they'll pop up and be available from. I'm just excited about the exchange side of things, whether it's centralized or decentralized exchanges, so that we can essentially make these products available as a spot market and then have the index powered futures on the same exchange, allowing for users to, as I said, buy the spot, short the perp, get yourself an easy hedge if you want to, as an initial interesting triangular arbitrage opportunity.
So we've mentioned a few different platforms here then, Fran. So we've got Techemy.capital, which is the Techemy Capital website. Obviously Balancer, there's Bitsy, there's Leverage. But just kind of, if people are interested in learning more and they want to find out more about these ETPs and how they can potentially get exposure, what is the best starting point, or where do they go? What should they do?
Yeah, sure. I mean, I would say to go to Techemy.capital and click on the Invest in DeFi button and find your way to passive investment products. That's where we host all the information regarding our ETPs with handy downloadable methodologies and fact sheets and product brochures and all of the rest. Any exchange that we've been speaking to regarding hosting these ETP products, we'll be linking back to the methodologies on Techemy Capital and Brave New Coin, where we have a dedicated page to rebalancing notifications and stuff like that. So Techemy.capital, I'd say, is the first port of call. And obviously people can go check out Balancer Smart Pools and see the ETPs on there as well. Yeah, I hope that answers the question.
I think so. Well, all sounds very exciting. Let's go to a very quick break, and then we'll come back and we'll just finish off. I'd love to get some thoughts from both of you on your respective roadmaps, going forward, what products are in the pipeline, what you're looking to release next, anything exciting that you can hint at, and we'll also get maybe just some kind of macro thoughts on where DeFi is at and where DeFi is heading as we go deeper into this crypto bull market. We'll be back in 1 second.
For crypto indices and benchmarking, Brave New Coin's powerful indexing engine can calculate high-frequency intraday and end-of-day indices for a wide range of index products. Brave New Coin's custom indices team delivers experienced consultancy, premium data, and trusted calculation. Contact BNC today to find out more.
All right, we're back, and I'm with Fernando from Balancer and Fran from Techemy Capital. I said we'd just touch on product roadmaps, that kind of thing. Fernando, should we start with you? Just look at anything you want to share, really, in terms of where Balancer is at, what you've got in the pipeline, version 2, and any other exciting developments you want to hint at or throw out there.
Sure, Andy. So we're heads down working to launch V2 by end of March, which is our goal. There's a few very interesting partnerships that we are about to announce that will help us make V2 a lot more interesting than if we were working alone. And of course, those are only two of the big partnerships that we are seeing coming. Like with Techemy Capital and other protocols and teams using RV2. But basically, we're very excited with the idea of asset managers that can utilize the underlying tokens of a pool to increase even more the capital efficiency of a pool. So if you have a pool that has two tokens whose prices are not fluctuating too much, it's most of the balances of the tokens that are in the pool are not being utilized the whole time. So you can, under the hood, send them to a lending protocol and thereby increasing your yield or your APR. And there's other interesting things that you can do with fees that are dynamic, and more on that probably in 2 weeks' time. But we're very excited with using Balancer V2 to increase capital efficiency and also increase gas efficiency. So you'll be able to take more out of Balancer, spending less money in fees that are paid to miners.
Fantastic. We do really need to see people do everything they can to address those pesky gas fees. But Fran, let's go back to you. So, just looking at Techemy.capital now, you can see you've already got a number of different ETPs and DeFi products that you're kind of appear to be in the pipeline. But do you want to just speak to the Techemy Capital roadmap and what you're hoping to deploy over the next, few months or this year or whatever? Go for gold.
Crypto months or real life months? It's like one day in this space is like a month on the NASDAQ. Thanks, Andy. We just launched what we call the Holistic Set, an actively managed portfolio traded by Josh Oshlowitz, 33K Moku guy, as he's called on Twitter or referred to. And that allows users to just super quickly, add capital and have somebody else trace the trend on their behalf, which is great for people that don't want to pick bottoms and tops or don't know how to trade or don't have time to trade.
Yeah, that's a cool product. That's essentially, it's like on-chain copy trading. And of course, Josh he's a pretty smart guy, probably pretty switched on. And yeah, that's on Enzyme, right? Gives exposure to BTC and ETH price action, long and short.
Yeah, exactly. So that's a nice, simple, clean product that's gaining some popularity, and that's only 7 days old in terms of being live. Tomorrow the PR goes out. So by the time this podcast is published, it would have been a day or two that it's been announced regarding all the ETPs that we're building with Balancer. So as we mentioned, we'll start off with the Vault ETP and the DeFi ETP. And, there's only so many ETPs that can be created at this time. So we'll be exploring things like an NFT ETP, and other subsets, perhaps, privacy or interoperability or exchange tokens bundled together into an ETP. We believe there's only space for about 8 or so, good methodologies in this space so far. So once those are launched, or at least the first few launched, we'll switch focus to essentially scaling those, integrating those into more and more assets. And then as, over time, assets become available on chain, as more things become digitized and highly liquid through Balancer, whether it be different cryptos, say Monero, Zcash, whatever, wrapped on Ethereum, we could create a privacy ETP, for example. And then as real world assets become available and liquid, stocks, bonds, golds, commodities, whatever, we could look to recreate legacy world instruments in a non-custodial way for these ETPs. So, our roadmap for ETPs is only limited by the availability of assets available on chain, essentially. And then the following week, we're launching a DeFi, decentralized DeFi fund, essentially an actively traded DeFi fund that mimics the thesis that we ran last year. We had a private proof of concept internal funds that returned 411% in the calendar year 2020. We're now making that available again using Enzyme Finance through Techemy Capital to a wider audience. So yeah, it's all steam ahead. We're probably not going to go wider than those 3 types of products. And we really think that particularly the ETPs, I've been dreaming of decentralized exchange-traded products like this, again, since back in 2014, early days of Bitcoin and early days of DEXs. And it's only now that, this incredible infrastructure like Balancer has come to a point where it's scalable and totally possible. So we're all in on scaling these ETPs and letting the world know that there's a easy and convenient and self-custodial way to get exposure to a particular thesis.
Absolutely fascinating, Fran. There's some exciting products coming up, and look, you're exactly right. It is just this incredible rise of decentralized finance protocols, like a Balancer and Enzyme and all the rest that have suddenly made this a brave new world sci-fi DeFi future possible, and people like yourselves are bringing it to life. Amazing to see. So I guess that's a kind of a roundabout way of bringing us to some closing thoughts. You know, if we look forward, just I know it's a huge question, and no one knows, but no one's deeper in this stuff than you guys. So let's start with you, Fernando. I'd love to just cast your mind forward. Any sort of emerging DeFi trends that you're watching, or what would you like to see happen with DeFi this year?
I think a trend that a lot of people are watching is the NFT trend. I think people are valuing collectibles on chain more than they've had in many cases real world collectibles. So that's amazing to see. I think it's it's kind of obvious for those who've tried and experimented with it, but for those who just see it as kind of a transaction on chain, and as far as there's a market that values those things and you can get real money, then you start to see that collectibles, NFTs are really something. In terms of what I want to see this year and kind of the market, like DeFi space overall, I think we are very much in need for a scalability solution that most protocols choose, and there's kind of some idea of possibility of composability like the layer one today offers. So I'd love to see the teams and projects and protocols in Ethereum and DeFi converging towards a solution where we can keep composability and increase our TPS, transactions per second, by 100-fold and reduce costs for everyone. Because today, even for whales, it's been like hard to keep participating in DeFi with even like 1,000 gigaway gas prices. So we need some more scalability to keep making Ethereum and DeFi inclusive and permissionless, so that everyone can get exposure to amazing products like Techemy Capital's funds.
Yeah, that is exactly right, Fernando. And in some ways, DeFi's exponential growth and an incredible success story has, it's become a victim of itself just because it is limited by what Ethereum can do at the moment. And but yeah, as you've talked about, there are so many different teams working on different scaling solutions, but yeah, there needs to be some kind of interoperability. It needs to come together. And let's bring in you, Fran, because I know you've got thoughts on this as well. So closing thoughts from you, Fran. Scalability solutions, DeFi predictions, what do you see going forward?
Well, it was mid through last year that TCAP put out an infographic, and in fact the whole presentation sort of calling for a 5 trillion assets under management locked within DeFi in the next few years. Yeah, it's just been incredible to see the rise of DeFi, and for a different perspective, think of it this way, right? You got dollars sitting in your bank account. How much are they earning you? 0.5% if you're lucky, maybe 5% if you're super lucky and lock it up for a year or two in some kind of long-term pie investment scheme for your bank or whatever. Most bank interest rates are going negative, and it's just becoming so much easier to take dollars out of your bank account, buy some stable coins, stick them into a DeFi product, and be earning 10, 15, 17% interest per year in a relatively tolerable risk profile of an asset. So while everyone's sort of staring at the innovation, which is great, it's really that the macro of what's going on in the real world is driving dollars to exit fiat and enter DeFi. So I expect direct fiat to DeFi on-ramps. I also expect direct dollar and fiat to layer 2 on-ramps shortly as well. So just moving on to scalability, what we have currently is kind of akin to the protocol wars of 2015, where you had all these different consortia rise up. We had R3, you had, in their quarter, you had 3 or 4 sort of standards being proposed for DLT and blockchain, and now you've got multiple standards being proposed for Ethereum layer 2 scalability. But all of those layer 2 solutions, while they seem to be, busy competing with each other, they're all together competing with other layer 1 blockchains like Binance Smart Chain. It's just incredible how much growth we have seen on that chain. And while there's some centralization risk, and it's not as decentralized as Ethereum, they've just made it incredibly easy for projects to port over. It's the same ish code base and all the rest. So where I think all this is going is liquidity should migrate to where things are the most efficient. So there's OMG, there's a whole variety of rollups and ZK rollups, optimistic rollups, and then you've got Gluon, which is Gluon.network, focusing on trading, high capacity matching engines as opposed to smart contract functionality. So what I'm hoping happens is that people migrate towards Gluon, simply because most of the DeFi activity, AMMs like Uniswap, solutions like Balancer, all of these great products out there, they're all trading focused, right? They're all transaction trading focused. Solutions like OMG are great for dApps that require smart contracts, but when you need order execution, you want to be using a solution that is specifically designed for order matching. So I think that what we're hopefully going to see is a multi-chain layer 2 environment. So while everyone's focusing on layer 2 for Ethereum, I think layer 2 ends up expanding and becoming compatible with multiple chains. So think of it like Elon Musk's kind of boring company where he digs tunnels under the ground. And you got one blockchain is, California, you got another blockchain is New York. And underneath is a tunnel that doesn't care if you're Ethereum or if you're Binance Smart Chain. Both, multiple blockchains can use the same layer 2. So that's kind of where I see things happening: interoperability between layer 2s and interoperability between blockchains, thanks to layer 2 solutions.
Fascinating indeed, Fran. And look, I did enjoy that Elon Musk analogy or metaphor. So shout out Elon Musk.
Me too.
Look, let's finish this off, gentlemen. Been fantastic to talk to you today, and look, we've covered a lot of ground. It's always with DeFi, it's easy to get into the weeds, but you kind of have to with this stuff. But let's just close this off. So listeners, links to all these different platforms will be in the show notes, so easy to find and follow up on. But just to finish off, Fernando, just give us your closing thoughts and where people can go to find out more about Balancer or follow you on your various platforms.
Sure, yeah. So you can find more about Balancer on Twitter, mostly. Balancer Labs is our handle. My handle is FC Martinelli, LLI. We're very excited with any projects that have ideas around arbitrary AMM logic. So anything that's different from the conventional X times Y equal K equals K. Any crazy ideas, like that's what Balancer V2 is made for, like teams with big dreams and who want to deploy cool stuff on DeFi. Balancer V2 is for you. So come talk with us also on our Discord. All the links are on our webpage on balancer.finance. And beware of other pages that are not exactly balancer.finance or balancer.exchange, because there are many phishing sites out there. Thanks a lot. It's been a pleasure talking to you, Andy and Fran, as always. Take care.
Brilliant. All right. Thank you, Fernando. Same for you, Fran. Final thoughts and where should people go?
You can find most things regarding our ETPs and DeFi solutions on Techemy.capital. You can always check out bravenewcoin.com for news, podcasts, and obviously the methodologies behind these products. You can find me on Twitter. I'm not very active, but it's @Techemist. And my final thoughts are, I'm just excited about this trajectory in this space. The whole world seems to be on fire and screaming out for DeFi products and solutions. So, they say software is eating the world, and now it's time for DeFi to eat the financial world and fix things, in my opinion. And yeah, thanks for having me back on, Andy. Always a pleasure.
Brilliant. All right. Thank you, gentlemen. Yes, indeed. DeFi is eating the world. Bitcoin is eating the world. And don't you love to see it? All right. Thanks, guys. We'll talk soon. All the best and bye for now. I really hope you did enjoy today's episode, and if you did, please do subscribe to the Crypto Conversation in whatever podcast app you are using. But for now, that is us. We are out of here. See you next time. See you real soon. This was the Crypto Conversation for Brave